I just wanted to keep these videos, in a nice length so that, things are uploadable in a fast speed, and just in the interest of keeping them succinct. So moving to the next part of this video, also one thing that I must say is I'm not being paid in any way to promote these two brokers. I don't get any commission for doing this, but this is just my own experience that I want to share with you. I think that these two are the best in the market. So if you were considering starting somewhere, this is where you would start. You need a broker to get your trades executed. They are the person that helps you execute your trade to the clearinghouse. So if no one knows how trading works, you send an order through your broker sends the order to the clearinghouse executes the order, and then your order is recorded on a chart. And that way, you can see where the price action is. And there's millions and billions of trades going on every single day. So that's how things work in the real world. Now, moving on to the different types of strategies that you would use in an active management style. You're going to be looking primarily at two things: fundamental analysis and technical analysis. These are going to be your bread and butter as a trader, and you're going to have to think of this before you think of what kind of a horizon of a trade you're going to take. And when I say horizon, I mean of the time period of your trade. So starting off with the fundamental analysis. You want to look at fundamental analysis for all businesses that you invest in. As an investor, in fact, you should look at fundamentals for every single company that you invest in, because that is really the most important thing. And when we say fundamental investments, what are we talking about? We're talking about looking at financial statements, the 10Q and the 10K, which is what companies have to file with regulatory organizations in order to make shareholders known of their position, their financial position, their liquidity, their risks that they've taken on in the year. These are financial documents that you have to read. For example, if you're thinking of investing in Facebook, you would want to read what the CEO, Mark Zuckerberg, has to say about the company, about forward-looking statements for the next year. And so that's where the 10K or the 10Q, which is for the quarter, comes into play. And reading this will usually give you a very, very deep insight into the company. And I cannot stress this enough. This is a very important step that people always miss. They always read the news and they always read everything else, but they don't read these documents that are super important, because these are designed for shareholders, and they are there to get shareholders to understand about the business deeply. And in these 10Ks, there are financial documents that will allow you to also assess the liquidity of the company, how heavy it is on the cash position, what does the balance sheet look like. And if you don't know how to read those things, it is not that hard. It's really just a YouTube search away or a Google search away. The second thing that you want to do fundamental analysis for is to find out the company's intrinsic value. Now, intrinsic true value is one of the most important things in finance. For example, if you knew that Facebook had an intrinsic value of $190 and its actual value, so taking into account how much of cash it has, how much growth it has in the next 5 to 10 years, and you take a growth rate and discount the future growth to the present value, you would get its true value. And this value would help you ascertain if Facebook is now oversold or overbought. So if Facebook is trading at $210, for example, it's not right now, but I'm just giving you an example. If Facebook's trading at $210 and the intrinsic value is $190, you know that the stock has been overbought. Now, it doesn't mean that the intrinsic value is what the market will follow. No, because there are periods of overvaluation and undervaluation. But that's when this valuation comes into play, because if you know the true value of the company, the market value tends to fluctuate between the intrinsic value in a plus-minus fashion. So it's important to study this. And if you don't have an idea of how to do this, there are many platforms that will teach you, actually. And I will be definitely making videos on how to do intrinsic valuation, and also putting out an Excel sheet for you guys to follow along and learn how to do these. Pretty straightforward and not too crazy. So other things that are sensitive for fundamental analysis are macroeconomics and news, as well as industry and sector information. So for example, when the central banks issue a rate cut or a rate increase, those are things that will affect your fundamental analysis, because now it affects the company's position, it affects the balance sheet, it affects many other things that will drive the company's stock up or down. And this fundamental analysis is important because you need to keep it at the back of your head when you are making decisions for trades. Things like, for example, news, right? The coronavirus just came out, and now you can see the market's starting to sell off a little bit on the news, because people are starting to think, okay, you know, maybe there'll be less global affluence, people will travel less, people will do business less, there will be less money collected from businesses, maybe businesses might suffer, and so market sells off in anticipation to correct those values. So news is also important, but I'm going to explain in a later video that you never want to listen to the news. You just want to take it as kind of like a grain of salt. You just want to use it as entertainment value and keep it at the back of your head so you know what is going on. And then industry and sector information is definitely important so that you know where the secular trends are going. For example, right now, you know that AI, 5G, cloud computing, and financial technology are at the forefront of everything. And so keeping a tab on these things will definitely affect your fundamental analysis for various companies. And of course, the fundamental analysis determines often what kind of a trader you are. So if you're an investor in a long position holder, fundamental analysis is often what you will be concentrating on. I'm not saying that you won't use technical analysis. You will, but it's not going to be a big weightage on your analysis. So moving on to technical analysis, which is what is the most famous thing. And I honestly think that all YouTube videos are so focused on technical analysis to oblivion that I think that they completely miss fundamental analysis and they completely miss the most important parts. Now, I'm not saying technical analysis is not important. It is, but to a certain extent. In fact, I often give my trades a 60-40 analysis where 60% comes from fundamentals and 40% comes from technicals. Technicals are important for short and long-term investments, both, because you can tell it's basically forming trends and patterns in your head and trying to figure out where past action pricing is going to go in the future, which is not a very good indicator, because the past often is a reflection of the future. Very, very rarely will you see that something happened in the past is now happening in the future. And even though it can happen, things tend to happen that way, but it's not a very reliable way to do your trades. Mainly technical analysis is used for analyzing supply and demand. So when you're looking at supply and demand in charts, that's essentially when a bid and an ask matches and a buyer and a seller meets. So when you look at where the buyers and sellers are, you can tell where the key resistance and support levels are in that market. Now, a good thing that technical analysis is used for, which I use it for on a daily basis, is to know where entries and exits are. Now, based on where buyers and sellers are lined up in the market, you can often tell where they're going to sell off or where they're going to buy. And for example, if there are 20,000 people willing to sell something at $20, then you know that level is going to be a very, very substantial level. So you want to be aware that before the stock hits that level, you want to get out. And technical analysis is used majorly by people who do swing trading, which is a duration of more than a day or more than 2 days, up to like a week or even 2 weeks sometimes. And then day trading, people who get in and out of trades within the day, and scalping, people who use get in and out of trades within like a couple of minutes, basically. So these are all the breakdowns of how fundamental and technical analysis work. And I would recommend that you study these very, very carefully before you even jump into a trade, because you need to know how the bare bones of the system works before you can even get into the whole nitty-gritty and start into trade. So start with paper trading, concentrate on learning all these, and I'm going to have the next video out for you guys that's going to dive deeper into fundamental analysis, deeper into technical analysis. We're going to branch out into those two things. And then we'll get into more interesting things such as insurance, option contracts. And yeah, I will see you guys in video number 4. Thank you for coming to my page. And if you haven't, please hit that like button and subscribe for more.